Friday, June 7th, 2024, Monaco 64, home of alternative economics and contrarian views. So Clive and I are going to look at the threat of a world war. And that's not something Clive and I talk about. Clive usually focuses more on the markets and what he's doing in terms of his portfolio and investment. But we think it's a pretty serious situation right now. And that, interestingly, is happening on the eve of what people call the petrodollar agreement, but which actually wasn't called the petrodollar agreement. It was like a joint economic military cooperation between the United States and Saudi Arabia. And it was signed on June 8th, which is tomorrow, at Blair House in Washington, D.C. Blair House is it's like the guest house that the White House keeps for foreign dignitaries. So, Clive, I've noticed from corresponding with you that you are very concerned about what is going on vis-a-vis the West and Russia.
I am, Mary. In fact, I'm very, very concerned by the turn of events over the last week. And I think it's gone under the radar screen with the vast majority of the population everywhere who've become a bit bored with watching the events around Ukraine, Russia. But there's been an important change. And if I may just share my screen with you, Mario, to show you a couple of the events which makes me particularly worried. So I hope you can now see what I'm looking at.
Yeah.
So we're looking at a few weeks ago, some drones from Ukraine destroyed the Russian air defense system, or part of it. Now, these drones obviously are very sophisticated machines. They're complicated to operate. I don't know who made them. I don't know who operated them. But obviously taking out some of Russia's air defense systems must have been a big concern for Russia, because this is what they would use to protect themselves against a potential nuclear attack. So that would have been the first part of my worry. But we can move on to what actually happened last week. Biden, who had previously said, we do not want Ukraine to use any Western weapons outside of Ukraine, no fighter jets, no drones, no bombs. There's been an about turn a week ago. Biden now allows Ukraine to hit Russia, inside Russia, with US arms, and NATO is in agreement with that. So it means that the USA potentially will be supplying arms to Ukraine, which could be used to strike targets inside Russia. Now, Russia can't know if any of these weapons could be nuclear tipped. But if I can put that into perspective, it's a bit like what happened with the Cuban crisis, which you're looking at here back in the 1960s. For those who don't remember, Russia was offering to Cuba to supply Cuba with ballistic weapons, which were capable of hitting the USA. And the US said, no, you don't. We're not having any of that. We don't want weapons within reach of the USA. And the Russian warships were sailing towards Cuba with these weapons, and the US Navy sent in their battleships around Cuba and said, you come any closer and it's war. And it was literally on the brink of nuclear war at the time, but at the last minute, Russia backed off and the ships sailed back to the Soviet Union as it was then.
Yeah, can I just intervene a little bit there? And the reason they backed off is because the Russians were upset, or the Soviets, that the US had put missiles in Turkey, nuclear missiles, which is very close to Russia. So the agreement there, they agreed to, the Russians agreed to stop doing what they're doing in Cuba, but the Americans withdrew those missiles from Turkey. So even at the heights of the Cold War between capitalisms and communism, they were able to sit down and talk, and that unfortunately doesn't seem to be something they want to do. I saw that Biden, or B-Day as you call him, he called Putin a tyrant yesterday at the D-Day celebrations in France. Anyway, I'll let you continue.
So, as a consequence of the American stance that NATO weapons can be used to attack Russia on Russian territory, as opposed to Ukraine defending itself on Ukraine territory, there's been some very unambiguous warnings coming out of Russia. For example, you're looking at a video by President Putin here. He warned the West that NATO members were playing with fire by proposing to let Ukraine use Western weapons to strike deep inside Russia. And he said it could trigger a global conflict. Later on, in a conference in Uzbekistan, in the press conference afterwards, he warned that he may, or small countries, which are NATO countries in Europe, are densely populated, and they had better watch out because as he said, the Biden's administration move may have fatal consequences. He said that he basically said that, what did he say here? I'm just reading it from my paper here.
Yeah.
Small European countries should be fully aware of what is at stake. They should keep in mind that theirs are small and densely populated countries, which is a factor to reckon with before they start talking about striking deep into Russian territory. It is a serious matter. And he went on to say, for some reason, the West believes that Russia will never use it, but we have our nuclear doctrine. Take a look at what it says. If someone's actions threatens our sovereignty and territorial integrity, we believe that it is possible to use all means at our disposal. This should not be treated lightly. Now, these warnings were reiterated by this man, and maybe you can have a few comments on this, gentleman, Sergei Rybakov. But he said that the USA is making a fatal miscalculation by not listening to what Putin said. Do you want to comment on who he is, Mario? I think you know Sergei Rybakov.
Well, I don't know him, but yeah, he's the deputy foreign minister of the Russian Federation. So his boss is Sergei Lavrov, and I watched that video you sent me from the Judge Napolitano YouTube channel, and he had Larry Johnson speaking for about 11 minutes. And I think Larry Johnson worked for the State Department or the U.S. government. And he said he's met both Sergeys, and that they're very serious, competent diplomats, and that the Russians have been they've been very patient, and they haven't done, cross red lines, so to speak. But there comes a point, Larry Johnson warned, that people like Rybakov and Lavrov, they're going to lose patience, and they're going to have to do something about it. And I think the public in the West has been kind of told Jack and Nori that Russia invaded Ukraine with no provocation, but they never go back to 2014 when Victoria Nuland, under the Hillary Clinton rule of the State Department, fomented a coup in Ukraine. And that's when the Kiev government started going after the Russian ethnic population of East Ukraine. And I think Russia's been quite diplomatic. They had the Minsk agreement. They said, we don't want to break up the Ukraine. We just want the Kiev government to respect everyone in the country. But yeah, that hasn't happened, and that's why they had to start this. They call it a special military operation in 2022. But yeah, the West is kept provoking and poking the bear, and
Well, I'm certainly not going to take sides here. I'm not a military person, and I'm not judging who's right and who's wrong. But I think where we have got to is the world is literally on a tightrope. Unless things de-escalate, it could turn very, very nasty.
yeah, I'm not taking sides here either because I'm a kind of an anarchist, Clive. I like to look after myself and my family, but this could affect me, of course. All I'm saying is that yeah, they've kind of in the West, you have to go back to the early 90s. It was agreed upon that the Soviets would um, leave Eastern and Central Europe, and they did, and that the US or NATO would not go east. And all of that, those promises have been broken by NATO and the US. And the reason I know this is because actually my degree at university was not just economics, but international relations. So, and you try to tell that to people, they say you're a conspiracy theorist. But now it's affecting us because it looks like Biden and Blinken, they're like loose guns. And Clive, just wanted to, talking about the petrodollar agreement. Um, I have it was signed as a joint economic and military cooperation agreement between Saudi Arabia and the U.S. So they didn't even talk about how can I say, they didn't even talk about oil in that agreement. And it was signed in Blair House, as I said earlier. And I was looking at Blair House on Wikipedia, and I'm going to try to find. Oh yeah, here you go. And and they talk about Blair House, and they had a few photos of Blair House, Clive, and I think you find this interesting. So this was U.S. Secretary of State Hillary Clinton hosts a working lunch for French President Francois Hollande in the Treaty Room 2012. But the interesting thing here, Clive, that I saw, you got Hillary Clinton here, but look, you've got Anthony Blinken, that guy, Jake, I forgot I forgot his name.
Yeah. You mean Jake Sullivan?
Yeah, Jake Sullivan, right? And then you've got Victoria Nuland, and these three guys, they've been instrumental in doing, disrupting the Ukraine and also kicking off this war. Well, this guy now is the Secretary of State. And I would say that Hillary Clinton's still in charge, even though she's not in government. And that's what's worrying. I think these are what you call the neocons. And there you go.
Well, I kind of smiled at your picture there. They're all squeezed up elbow to elbow there, aren't they?
Yeah, and it looks like those three there are just carrying the torch for Hillary Clinton.
So let's terminate on geopolitics, but I think the real point here is tensions have escalated a lot. I'm very, very concerned by the turn of events over the last week. I hope it won't get any. I hope it will de-escalate. But let's move on to what else is happening in the world, Mario.
Yeah, let's move on to a little more economics and currencies. And that's why we're going to talk about the petrodollar. And the reason I want to talk about it, because I'm seeing a lot of people on social media, especially people in the alternative, saying that the petrodollar agreement is going to expire. I think they're saying it the 9th. And the thing is, I looked, Clive, at this time machine thing from the New York Times, and it's the best part of the New York Times. You can go back.
Absolutely.
I don't read the New York Times per se, but this is June 9th, Sunday, June 9th, 1974. There's a lot of people saying that it expires on June 9th, but it was signed on June 8th, the petrodollar agreement. but they don't mention oil at all. It says milestone pact is signed by U.S. and Saudi Arabia. Wide-ranging agreement calls for economic military commissions. And yeah, June 8th. And it says here cooperation is the key. So I haven't found anywhere where it says that it's going to expire tomorrow, June 8th, 50 years later. You've said as well that you've seen that they renew it every 5 years. I've seen something to that effect. They renewed it in 2010, I think. So technically, it would be 2025. So we don't know. But I think the key here is cooperation. And the other thing, and it's one of the reasons why the world's getting so turbulent, Clive, and we're in the on the brink of war, is because the U.S. power through it, the dollar is being challenged. And you can go back over 2 years, December 7th, 2022, and I remember covering this. China's Xi on epoch-making visit to Saudi Arabia, to Saudi, as Riyadh chafes at U.S. censure. So that was a huge meeting between the two countries. Xi Jinping met MBS. He met the king as well. And I remember at the time them talking about how they're going to cooperate with the oil, that they would use their own currencies to pay for the oil. Last year, Saudi Arabia was predicted to join BRICS, but when push came to shove, they didn't join it this year. They're saying they're still thinking about it. They're sitting on the fence. But my point here is that, yeah, it doesn't matter if the petrodollar agreement, well, it wasn't even called that, expires tomorrow or Sunday. I think what's going on is that the rest of the world is cooperating a lot more amongst themselves. And, and as that agreement back in 74 said, cooperation is the key. And the U.S. doesn't seem to be cooperating with people anymore. And therein lies the whole problem. And I don't know if you've seen this, Clive, as well. There's someone put this here. This 2014 US dollar share of global reserves was 59%. Gold was 10%. And in last year, the US dollar share was 49, and gold had gone up to 19%. So I'll let you chime in.
Well, going back to the oil agreement with Saudi Arabia, we must remember 1974 was a year when the oil price had been going up due to OPEC. I mean, OPEC was literally back then holding the world to ransom over oil, and America needed the oil badly back then. So every time they hiked the oil price, it was a big panic for the world, really, in particular America. And you can imagine that there was a great deal of motivation for America to sign some sort of accord with the Saudis to get something back, a quid pro quo. And of course, the brilliant deal that the Americans did is, you take our dollars, which they could print with impunity, and we'll get your oil. So it didn't actually matter anymore if the oil price went up, because you can literally print the dollars as much as you like and give them something worth nothing. Now, back then, China was not an important nation either in any respect for on the global scale. But what's changed is, here in 2024, China is a very important nation. America doesn't need Saudi oil nearly as much as it did back in 1974, and China needs more and more oil. So it's quite understandable that the Saudis are cozying up to the Chinese, because if they want somebody to buy their oil, the Chinese are likely to be one of the major beneficiaries of that, one of the major buyers. But of course, it would not make sense for the Saudis to upset the Americans too much either. There's a lot to lose. Don't forget, the Saudis will have all around the world, but particularly in the United States and Switzerland, huge quantities of petrodollars, but let's call them just dollars in various respects. And they'd like to hang on to those for all kinds of things. So I think they're not in a hurry to make a decision which will upset the Americans. And I kind of see this impasse between, is it China, is it America, carrying on for some time.
Yeah, and just wanted to show the viewers Right now, this is from October 2023. It's actually the United States is the biggest oil producer, uh, per millions of barrels per day. And then you've got Russia, and actually Saudi Arabia is not as important. It's only number three. And you've got Iraq, China, even China produces a lot of oil, Iran. And yeah, so it's not as important. The other thing, though, with that joint economic and military agreement, which we call the petrodollar agreement, is that I think it wasn't written in the agreement because they don't talk much about oil at all. They don't mention oil. What was understood by the Saudis and the Americans that the Saudis would only accept dollars, not from just from the US, but from the rest of the world. And that's what made the petrodollar really strong because a lot of countries needed to buy oil from Saudi Arabia. But as I showed you there, Saudi Arabia is not as important these days in terms of oil. So yeah, I don't think it will matter that much. A lot of people are hoping that something's going to happen over the weekend because of this. So I just wanted to like let people not, tell people not, don't get too excited about this, I would say. And yeah. So
So
Clive,
we,
yeah,
yeah,
go ahead. No.
I was going to suggest we talk about the ECB's interest rate reduction.
Oh yeah, and they did the day after the Bank of Canada, and I guess the central bank where you are, they cut rates. Was it in March already?
Yep, correct. So we're seeing the first round of interest rate cuts from around the world. It's anybody's guess whether the United States will do so. I'm kind of guessing not. And the reason for that is there's, according to, I've done some work on the various precursors to US inflation, looking at shelter, looking at commodities, which are looking at the PPI and things like that. What I can say in the USA is there's been quite an uptick in the last few months since December in these early indicators of inflation. And the other thing which is not going to go in favor of the USA is what's called the calendar effect. The calendar effect basically means that if we're looking at the inflation rate of the USA on a one-year basis, which would be April to April, a number of the components of the index were at pretty high prices a year ago, and they then came down. So as we move forward from our starting date of April 2023 to May 2023, June 2023, all the way through to December, that starting point for a number of the components will be going lower. So that means that even if that particular component price remains unchanged from here, it will, on a one-year basis, look as if the price is increasing. Now, according to my calculations, based on everything we can possibly know about the direction of travel, I think that by the end of this year or early 2025, the inflation rate in the United States will have crept up from the official 3.4% CPI to around 4% on CPI. Could be in December, could be in January 2025, which means that it's not heading in the direction of 2% as far as the Federal Reserve is concerned. Now, the Federal Reserve is looking at a different measure, which is called the PPE,
PC.
which is showing a 2.8% inflation rate. But I also checked on the numbers of that one. That one looks like it's likely to creep upwards as well. So the question is, what's the Fed going to do now? Are they going to say, well, 2.8% is good enough, we're nearly there, and reduce the rates, or are they going to hang on looking for better numbers, which I don't think are coming? Of course, the other thing which might make them reduce the rates in the United States could be if we have some very bad employment numbers, and it's too early to say which way those are going to go. I realize that an awful lot of people in America will tell you that the unemployment situation is terrible, and I have no idea. I just go on the official numbers. But those numbers officially haven't been too bad over the last year or so. But if they start to deteriorate, then that might be an excuse for the Federal Reserve to cut interest rates. Why is a cut in interest rates an interesting thing to focus on? It's because an awful lot of the financial world prices things in according to where the interest rates lie. In other words, higher interest rates to many would look more attractive to put your money into cash deposits or bonds or things like that. Lower interest rates means the alternatives like gold, equities, and other things might seem more attractive. So the whole world is sort of waiting for this interest rate decision. And the promise alone of an interest rate cut, which might come at some point, is perhaps one of the factors which has been driving asset prices upwards, because people think as soon as we get the cut, prices will go upwards. I think people are looking at the wrong thing. I think what people should be looking at is the real interest rate, which is the interest rate you could get minus the rate of inflation. And as I mentioned, the rate of inflation, in my opinion, is going to rise from here. I don't think at this point in time anyone's talking about a rise in interest rates, which means that the real rate of interest goes down, which makes asset prices, particularly those which have no income at all, such as gold and some NASDAQ stock, I suppose, appear to be more attractive.
Yeah, talking about the job situation today, we've got the non-farm payroll. It's always the first Friday of the month, unless it's like the first of the month. They postpone it to a week later. But as you can see here, it's coming out at 8:30 New York time, or 1:30 UK time, or 2:30 your time, Clive. And it's expected to, this is what we have to look at, this number here. It's expected to rise by 182,000. And also, I guess the unemployment rate, if that moves up to like 4 or 4.1, I think the Fed will look at that, because they always say, I remember listening, Jay Powell always says, we are data dependent. We will look at the data. So yesterday we had this ADP employment data, and that came out weaker than expected. And I don't know if you saw, Clive, early this week, there was a Bloomberg article saying that the Bureau of Labor Statistics overestimated job creation by like 1 million last year. So, and I
Yeah,
spoke.
so
Yeah, go ahead.
I mean, it's almost been habitual for the jobs numbers to be revised month after month. And what they do, the tendency almost every month is that they revise the previous month's number downwards, which makes the current month's figure look like it really good. In other words, it looks every month, it looks like more people are getting jobs than is realistically happening because of the fact they revised the previous month's number downwards. People don't focus on the fact that the previous number has been revised downwards, meaning that last month it wasn't true what they said. I would urge people, when they look at these numbers, and it will come out at the same time today from the Bureau of Labor Statistics, to also look at something called the Household Survey, which is another measure of the number of jobs produced by the same agency. But the difference between the non-farm payrolls and the Household Job Survey is this. The non-farm payrolls survey counts the number of jobs. The household survey counts the number of people who are working. Now, the distinction between the two is there are, without the slightest doubts, according to all accounts, people who have in America more than one job. They have 2 and sometimes 3 jobs. They might do a night watchman, they might have a job on the side, and they might have a day job of various descriptions, because that's the only way to make ends meet. Whereas the household survey, the question is, are you working? That's it.
Yeah.
So what we've seen over recent months, not only months, but over the last entire year, is the 2 numbers are pointing in completely different directions, meaning there are more people who've got 2 jobs and there are less people who are working.
Yeah, Clive, let's wrap up here looking at the markets. And while we've been speaking, actually, gold has been like hammered. Don't know why. There's no reason. And I've got here the hourly chart. because I was talking to you earlier, we were trading at 2,374 or 5 when we started this chat. And look at this. This is an hour chart. They just slammed it down to back to 2356. So I don't know what's going to happen. Maybe that is profit taking before the jobs number, some big person, or maybe the central banks. But what I was telling Clive earlier, and I'll show you here, the weekly chart, actually weekly, this is daily. Let's go to the weekly. What I was telling Clive was that we had something that is called an outside week. So last week, the low in gold was 23.20. And this week, the low was 23.14. So we made a lower low, but we've been able towards the end of the week, like yesterday and today, to actually break above last week's high of 23.64. Of course, and how they brought it back below that level, but we've made a new high. So that's an outside week, and usually that's very bullish. And of course, there's still a lot of time until the day is over. We've got the jobs data. It's 10 past 9 a.m. London time. So we've got about 4 hours and 20 minutes to that jobs data. And silver as well, of course, that's gotten hit here. Let's look at the chart. Let's do it an hour chart, or yeah, let's see, an hour. So yeah, we've had a pretty big yeah. So how do you see gold and silver and the rest of the markets, Clive? It looks like as well, just before you chime in, that the Fed and the Treasury, they've been able to bring Treasury yields down, and this is my cynical mind here. They might throw us a weak jobs data in order to keep yields low, because with the way the banking system is leveraged and has all these 500 billion of unrealized losses, they don't want yields to go up. So what do you say about that, Clive?
The Treasury's been borrowing a lot of money at the short end so as not to push up the rates at the 10-year bond. So that's kind of unusual. And at some point, they'll have to unwind that. And I expect that will come after the US elections. In terms of the gold price, I think it will go up for reasons related to the perceived, or actual rather, rate of inflation. There is little doubt that the level of debt in the United States and around the world is increasing. Governments are in a situation where it's very difficult to not overspend, and that debt, so the debt levels are rising, and they're rising faster than GDP, which is an unsustainable situation. So I think for that reason, people will continue to buy gold. As far as looking at the chart is concerned, I tend to say charts are useful to confirm your other theories, but on their own, they don't necessarily tell you the truth. It's about 1/3 of the time they tell you what's going to happen. About 1/3 of the time they tell you the exact opposite will happen from what the chart is telling you, and 1/3 of the time nothing happens at all. But obviously, if you can put that in conjunction with the actual news flow, with the actual economics around it, then you can reach a better conclusion as to where the probability lies. So my view is that gold and silver are looking extremely bullish at the moment. I'm going to be buying some more today. I've got that in my diary. I'm going to pop down to my local pawn shop where they've got some coins which have come in, and I don't think that the price at the moment is too expensive.
Yeah, and with that, Clive, I just want to show the viewers, because I'm affiliated with Miles Franklin, and he's got in the US, this is from my US viewers, he's got some specials that he's got 1 ounce silver Britannias for $3.10 over spot. He's got these platinum coins. I don't know if I don't buy platinum, but anyway, he's got these on special. And 1 ounce gold Britannia, $59 over spot, which seems like a pretty good deal. I would
Well, $59 over spot is a very good deal.
Yeah. And yeah, if you're interested, email them info@milesfranklin.com, or call them on 1-800-822-8080 and mention Mario or Monaco 64. So Clive, what's your view on the markets? I know it's short term. What do you think is going to happen this afternoon with the jobs data? And maybe you can leave the viewers with a piece of your mind about not just economics and money, but about what's happening vis-a-vis Russia and the saber rattling that is going on.
Well, before great battles, the generals in Babylonian times would go and ask the sages what would happen, and the sages would reply, "There will be a great victory," but they wouldn't say which one. Mario, there will, without the slightest doubt, be some knee-jerk reaction to the numbers, and since we don't know which way the numbers are going to go, it could be either way. But my bottom line is, if you look at it the long term, you want to be invested in other things than cash and bonds. So even though you might possibly get a knee-jerk reaction in favor of holding cash or bonds today, i.e. bonds might rise if your cynical view is correct. I don't think that will last. So I wouldn't be certainly wouldn't be a day trader. I think I would hold some gold, I would hold some equities, I'd hold property, I'd hold heirlooms, I'd hold tools, I'd hold any tangible assets I can to keep my bank balances down to the minimum. And I certainly wouldn't be holding bonds in a world where the level of government debt is increasing rapidly. So that's my message. If your viewers have any questions about anything I've said or about the economy in general or about their personal financial situation, I won't be giving precise advice, but they can contact me on LinkedIn and I'll aim to talk them through their questions.
Yeah.
So that's my name's Clive Thompson if you want to contact me on
Great.
LinkedIn.
Clive, I agree with you. Sometimes, especially me, having been a broker for 20 years, clients want to know what's going on almost minute to minute, and you just look at the trees instead of looking at the forest, and I think that's important. And I know this number moves the markets, but yeah, like you said, in the long term, bonds are going to be a horrible place to be because the currencies are gonna because the other side of all the debt are the currencies, and they're gonna have to keep inflating that debt because if they don't, everything is gonna implode. So with that, Clive, I wish you a great weekend, and also to you guys listening, a great weekend.
Thank you all. Thank you, Mario.
You're welcome.